Hey guys, this is Karthikeya Kantwal from Apex FinServe, and we'll be doing the same roundup tonight as well. 5 equity scripts as well as a quick lookup on the indices Nifty and Bank Nifty. But before we start, out of all the trades that we had discussed yesterday, two of were triggered Just Dial and Apollo Hospitals, out of which Just Dial gave us a smooth target hit and Apollo Hospitals closed somewhere near our entry cost. So it was a green day overall. Now starting with the scripts that we have for today, the first one that we have is SRT. SRT is pretty straightforward. It has broken out of the range, so we are going to simply take a long trade in the direction it has started forming fresh higher highs. Now it has to take a big correction, keeping in mind the length of the recent swing leg. So the correction we estimate should be somewhere close to 730, which also coincides with the previous resistance. So a good role reversal concept can also be applied here. Resistance turn support, so the entry would be a long position at 730 with the stop loss going at 720. Moving on to the next script that we have, Apollo Hospitals. Now Apollo Hospitals, we have a we had a higher low formation. It was making pretty strong higher highs. However, it has taken out one recent swing low in today's trading session, and it seems to have taken support at a previous swing high. Now the idea is now to take a short position somewhere in this retracement that is about to come. So we'll be taking a short position at 1412 with the stop loss going at the highest swing high that we have, 1430, in anticipation of fresh lower lows which are yet to be made. Moving on to the next script that we have, Just Dial. Now Just Dial is, as I've always said, it is a pretty finicky stock. However, it has made fresh lower low lower high formation, but it is yet to make a new lower low. So we'll wait for that confirmation. We'll only enter a short position because of the structure of the bias. We'll only enter a short position under 370 and not at 370. So this is the kind of trade where once again I would suggest you guys to use a SLM order type instead of a bracket order type. So the idea here is to short Just Dial under 370 with the stop loss going at 375. Moving on to the next one, PEL. Now PEL we had discussed yesterday. It looked like the bullishness that it has had all this time, it's not highly likely to be sustained. However, it gave a pretty strong opening today, and our trade was not triggered. The short trade was not triggered because we were to go short under that level, but it was not triggered. However, if we look at the hourly candle, it seems to be somewhat of a bearish engulfing at the recent swing highs, but it might transition into formation of lower low lower highs anytime soon. So we'll be taking a short position under the recent or the closest resistance turn support. So the idea is to sell it under 1425 with the stop loss going at 1440. The next one that we have is IndusInd. Now IndusInd Bank, if we look at the chart, it seems to have broken out of a range and formed a very strong up move. However, the thing is, such a large up move cannot really be sustained without a deep correction. Now that deep correction can only be confirmed once the resistance that was broken of 540 is reclaimed again and it goes to dips of about 525, 530. So that is the anticipation that we have. It might as well go above from here, but to be on the safer side, to be a bit conservative here, to be smart with our funds, we'll be taking a short position only under 540 with the stop loss going at 548 for tomorrow's trading session. All the scripts, all the trades that we have discussed here, the targets are to be taken as 1%, as I always suggest. Now moving on to the indices, starting with Nifty. Nifty, I told you guys yesterday, 10,800, you can take that as the resistance level and it would be just fair. And it acted exactly like that. It acted as a pretty good resistance level and we had a beautiful fall from there. Now using the same Fibonacci that we had yesterday as well, we can say that it has broken the 10,700 level and the next space is 10,600, which also coincides with the gap that is yet to be filled. So a safe or a moderately safe entry on Nifty would be to take a long position near 10,600, 10,560, 10,600, which coincides with our demand zone as well as the Fibonacci level as well as the gap filling. Now, however, we will take a brief reference of the option chain as well because tomorrow is the weekly expiry. Now, when we look at Nifty, we have the immediate resistance at 10,800 with added open interest of 1 million contracts, which is pretty big. For significant resistance, we have 10,900 with added resistance, with added open interest of 696,000 contracts and total standing open interest of 2.7 million contracts. On the support side of things, we have 10,600 with total standing open interest of 2.8 million and 10,500 with total open interest of 2.7 million. However, the thing to be noticed here is on the put side, we have a lot of negative change in open interest, which means that the put writers aren't exactly sure of Nifty sustaining these high levels. Now, this might be fishy, or this might be a planned move by the option writers as tomorrow is expiry. Which case is it? We need to decide through price action tomorrow in the live markets. However, if we go, just by the standing open interest, 10,600 is an immediate level of support, which does coincide with my chart level. 10,600, I would prefer to initiate a long position. Now moving on to Bank Nifty. We have a pretty similar case. The zone was broken 22,800 and it seems to be coming down on its way to 22,500, 22,200 even. However, there is no clear bias if we look at the charts on Bank Nifty. It seemed to be forming higher highs and higher lows strongly by today's market, but the last 1 hour of movement has broken down those, so that is invalidated. So we don't have a strong bias on Bank Nifty right now. However, when we go to the option chain, now option chain for Bank Nifty is not as clear for Nifty for tomorrow. There is no clear put unwinding or call unwinding as such. It is pretty balanced on both the sides. However, if you were to take 4 levels, 2 resistances, 2 support as every time, then I would say your immediate resistance would be at 22,800 with 308,000 total standing open interest and 134,000 added open interest. And your important level of resistance would be 23,300 with 140,000 added contracts and 293,000 total standing open interest. On the support side of things, we have 22,500, pretty close by, but the amount of writers that are present, that is pretty decent. So we have 81,000 added contracts and 351,000 total standing open interest. For significant support levels, we have 22,000 with 916,000 standing open interest. When we look at the PCR of both Nifty and Bank Nifty is on a relatively mildly bearish side, the PCR of volume at 0.83. However, the story is not the same for Nifty. When we go take the PCR of volume, the Nifty PCR volume comes out to be at 0.95, which is pretty bearish, and it also somehow coincides with the amount of put writers that have exited their positions. So we need to be careful while trading. If you're trading Nifty, be slightly careful even if you're initiating longs. I would suggest not to be aggressive. However, if you have a balanced trading system, you can go as aggressive as you'd like to be. That's completely up to you. This is all that we had for tonight, guys. I hope you had a good trading session today, and I hope that you have an exciting but profitable trading session tomorrow as well. As always, if you like the discussion that we have been having since a couple of days, be sure to like, subscribe, share and comment. Share it among your trading group as well if possible. And do not forget to click the bell notification on the channel so that you don't miss any future uploads that we do. Have a good night, guys. Thank you so much for watching.